Geojit Spotlight. Many investors trade in infrastructure and paint sector stocks. In this video, Anto Epen Thomas, research analyst at Geojit, will share his perspectives on the prospects of these sectors. He will be providing valuable insight into the current market outlook and will examine the potential impact of the infrastructure sector, particularly in the light of the upcoming national election. Welcome, Anto.
Thank you, Kirti.
So, Anto, what's the current market outlook and how will the national election impact the market?
Okay, before Diwali, we have seen some kind of consolidation in the market. It was basically due to the geopolitical tensions that has happened between Israel and Palestine, which has created some kind of panic in the market. And of course, investors turned cautious and they started booking profit in the market. And we have seen a surge in oil prices. Oil prices, it touched around $95 per barrel. That is created a headwind for this market. And if you see the US bond yield and all, it is during the start of the year it was at 3.3% and it went up to 5%. It was a 15-year high. That has created some kind of repercussions in this market. So obviously the selling has happened. So and inflation numbers also on the higher note. That also created some impact in the market. But after post-Diwali, we have seen some kind of resurgence in the market. It was basically the positive economic data, basically from US, UK and also India. It was pretty much good. The inflation number eased and it has created a picture that the Fed and the other central banks in the global will turn a dovish view. Of course, the Fed announced the previous policy that they will be it will be a dovish tone. We have seen from the US Fed, and earlier was the expectation that there is one more rate hike will be happening in this calendar year, but the overall sentiment is telling that there will be no rate hike in this calendar year. And some experts are pointing that there might be some kind of rate cut that may happen in the H2 of the next calendar year. That will be a positive for the market as a whole. And if you see the recession probability in US also, it came down. It was during the start of the year, it was 65%. It now come down to 55%. That is a positive. So we expect overall a pre-election rally is very much possible in this current juncture. Moving back to your sub question of the how the election will be impact the market. Before that, there is a 5-state election is going on. The result will be announced by December month. The people or the investors will see the state election and the national election is differently. State election, how the result will pan out, that also need to be considered by the market. But overall, in the long-term perspective, that is not a major worry for the market. Political experts pointing that the current central government will continue their mandate in the coming election as well. So that is a near-term positive for this market. But politics as a whole, it is not created a long-term impact on the market. The impact will be basically on how the global market and the domestic market will pan out. And also, H1 FY24 result was pretty much good. So based on these data, we expect that a pre-election rally is very much possible.
Since the result season has come to an end, how the overall result season unfolded and which sector performed well?
Overall, the Q2 result was robust. It is better than expectation. If you see the Nifty 50 companies, the expectation was 24-25%, but it came at 26%. It is overall better. Basically, what drive the profitability growth is margin has improved around a 400 to 600 basis points improvement we have seen on the EBITDA margin, that is earnings before interest, tax and amortization. That supported the companies to picture a pretty much good growth in this quarter. The companies which have done well, like banking sector, cement, auto companies has done well, and also power sector also done well during this quarter. On a weaker note, IT and metal has done poor performance during this quarter. Basically, the companies which are focused on international market has done weak. While the companies has main focus on the domestic business has done well during this quarter. For example, IT, their companies have also reduced their revenue target for the FY24 as well due to the weak demand from the global market like US, UK. Their clients has cut down their spending during this year. That has impacted the IT companies as well.
Despite a rise in profit after tax, why has revenue shown muted growth?
During this quarter, the revenue growth was muted. We have an expectation like 6% of growth was expected for the Nifty 50 companies, but the actual growth is 7%. It is marginally above the estimate. What happened during this quarter is basically the rural demand is not picked up in expectation, and also the erratic monsoon also spoiled the game, and the kind of realization growth it's on a declining path. The companies are not in a position to take the price hike. That also have some impact on the top line growth. However, there are some sectors which has done well. That is auto, cement, chemicals. Their volume was pretty much good, but on a mixed turn like FMCG, pharma companies, their volume was mixed. We have seen a weak kind of volume growth from the sectors like IT and paint companies. The IT sector was like the sectors which are highly concentrated on the export market has some impact during this quarter. Their spending has come down. That has created some kind of headwinds for these companies as well. And for the paint companies also, the realization growth has not happened that we expected. So that companies or that sector also in this regards.
Antu, since you're covering the paint sector, could you provide some insight into the sector and discuss how Grasim's entry will impact it?
If we analyze the Q2 paint sector as a whole, their volume growth was muted and their realization have some impact during this quarter. Basically, the erratic monsoon and a slow demand from the rural segment has created some impact. For painting companies as a whole, the Q2 was not a good quarter for them because during the monsoon season and all, the painting business will not turn positive. And also, the festival demand was deferred during this year. Actually, the Diwali will happen on the month of October. In this year, it is turned to the November month. So, discretionary spending has carry forward to the Q3 quarters. So that kind of volume we can expect in the Q3, but it has not come into the Q2. If revenue was muted, however, their margins, we have seen some kind of improvement. Basically, 400 to 600 basis point improvement we have seen on the EBITDA margin for these painting companies as well. Why? Because the crude prices went down. If you analyze the Q2 of FY24 compared to the Q2 of FY23, there is a moderation in oil prices by 12%. The painting company use their majority of the raw materials is a derivative of crude oil. That is, titanium dioxide is one of the main raw material they are used to manufacture decorative paint. So that prices also came down, which is supported their margins. So even though so that turned a positive headwind to the PAT numbers as well. And coming back to your questions, how the Grasim's entry will impact the sector. Grasim will start their operation by Q4 of FY24. We expect some kind of disruptions in the market. If you take the industry as a whole, paint companies largely controlled by the organized player. About 65 to 70% of the market is driven by the organized player, and rest 35-40% is from the unorganized player. So initially the hiccup will we expect for the unorganized player. And if you take the management commentary from the Grasim, they are focusing to a number 2 player in the paint manufacturer in India. So currently, the number 2 is Berger Paint and the third one is Kansai Nerolac. So these companies will have the much more impact compared to the Asian Paint. The Asian Paint is a large player, it is a leading player in the paint manufacturing company. About 40 to 45% of market share is driven by the Asian Paint. So the initial hiccup will be based on the second player and the third player. Grasim is looking to invest around 10,000 crores in this market. So the opportunities in the market is on a long-term basis is pretty much good. That is why many companies are coming to the market, like JSW Paints that are also coming to this market. Similarly, similar kind of capex plan is also announced by the Asian Paint. Around 8,750 crores of capex investment companies announced for the next 2 to 3 years. Companies like Berger and Kansai Nerolac also also announced this kind of capex plan. So on the long-term basis, we are positive on the sector, but valuation-wise, it is expensive. Asian Paint is trading on a 55-60x on a 1 year forward basis. Valuation-wise, it is expensive, but if any kind of consolidation in this stock, we can consider on a long-term basis.
So now we're moving on to our last question. What is the infrastructure sector outlook and how the upcoming election is going to impact the sector?
During this quarter, infra company as a whole, their performance was, the top line performance was mixed because the Q2 is not a good quarter for the infrastructure companies as a whole. Due to the monsoon season, their execution might not be happened. So the top line we have seen as mixed kind of trend. However, their margins has improved around 300 to 400 basis points. We have seen a kind of improvement in their margin because of ease in their raw material prices and all. That has supported the earnings growth during this quarter, and we expect the H2 will be better. The execution will be improved during the upcoming quarters as well. So we have seen the government has done a 10 lakh crores of capex for the infrastructure companies as a whole. So that kind of order inflow we can expect for these companies as a whole. If you take the example of a MoRTH, that is a Ministry of Road and Transport Highway, they have already spent 40% of their capex plan in H1 itself. So that kind of inflow we can expect for these companies in the second quarter, second half also. And their plan is like they need to spend at least 80 to 90% for their capex before December. So that is also a very positive for the sector as a whole. We can expect good kind of earnings visibility in the coming quarter as well. So their order book to sales is at a robust level. There is 2 times of their order is 2 times of their revenue. So companies as a whole, it is sitting with a robust order book. So the visibility for the upcoming quarters and second half is pretty much good. And if you take how the national election will go to impact the sector, we expect already announced projects, we don't expect any kind of disruptions. But the new project announcement likely to be defer. It may be happen for the next year. So fresh order inflow towards the end of the financial years is likely to have some kind of hiccups.
Thank you, Mr. Antu, for sharing valuable information with us.
Thank you.